Hello and welcome to another episode of Stock Shots. Please remember, I am not a financial advisor. I'm just giving my opinion based on some things I see, like support and resistance, supply, demand, and of course, some indicators that may be on the screen. So always do your own due diligence. Make sure you educate yourself and always look to the left because we're looking at things that have already happened to think about what things may do in the future. So this is another episode of Stock Shots. Welcome.
All right, let's get started with the C fund. All right, we're talking about the SPX, S&P 500, whatever you want to call it. For us in the TSP, we already know it's the C fund. I am worried. I personally am still in the G fund right now. And the reason I was in the G fund is because I saw a lot of divergence in the strength of the market. The last big high that we had was back here, and it was on March 25th, on that week of March 25th. Currently, we are not at the same strength, but our price action is still going up. The second reason is I don't mind missing out on a couple of dollars here and there because it's hard to time a top and a bottom in a market. And as you can see, we've had a nice little pull forward. And currently, if you are unable to see that, we are looking at a dragonfly doji. And the action is on the bottom. So when I say the action is on the bottom, that means the price action barely moved. For the entire week, we shot up, we came back. We actually hit the last high of the C fund, and that was 55.05. Now, on my other channel or my other video that I talk about the SPY, I actually had a call in, and I got out of that call when the SPY hit 550. Like, I was good with that. I made profit. I was really happy. The reason I want to make sure you understand that when you go up, it doesn't mean it's going to come straight down. It may just be a slight pullback. You have a gap here between the price of 54, what was that, 54.02 and 53.74. That could be a good area for us to pull back to. And let's see, from our last low here to here, that would give us 11.49%. Why is that important? Because if you do your research on the SPY, if you do your research on the S&P 500 and this, you will notice that the C fund, S&P 500, SPY, all that usually goes up about 12% and comes back 6. So this can qualify for me as that 12% push. I got a dragonfly doji. I have divergence. What I'm looking for now is I'm going to approximate a 6% down, and I'm pretty sure that's a 5. Well, there, that pretty much will take us around this weekly support and resistance. So right now it'll be support going down, but that's at 52.01. That will be approximately 5.7%. I can take that as 6% because that's a good roundabout area. There's never an exact thing. It's always areas. So I'll take that as an area where price may come down. So why is that? Okay. First, I'm going to put a here. .6% pullback. If it happens, I'm looking for it to go there. Next, I'm going to turn on my indicator. I'm going to make sure if that is true, what would happen. Now, covering the gap, I'm not concerned about that. That's normal. If it covers the gap, it'll most likely hit the 9-day moving average and then shoot up. If it's a very strong market, like I'm assuming it is. If it's anything lower than that, it'll hit the 48-day or 50-day moving average here, and that's still within the standard deviation. That's fine. That's healthy. That's great. If it's a 6% pullback, I'm looking for it to get to that 52.01. It doesn't mean it's going to be a candle that closes down there. It could literally just be a quick spike down, quick spike up, and then go and continue to the upside. So at this point, I'm just looking to see if it comes down to the 48-day moving average. That'll be around here at 52.60. So that's what I got for the C fund this week. Let's talk about that S fund, and yeah, let's get her done. And all right, so for this one, let's turn this off. Let's do all of our price action first. So just like the C fund, the S fund is showing something. In the C fund, it looked like we had a double top as well. This one's also showing that double top. I'm getting same thing. Last biggest price action or strength in the price was in March, the same week, 25th. Currently, we had a trend going down. We have a breakout of that trend in this fund. So in the S fund, like, we're going up. So I'm hoping that the C fund will follow, break down to one of the moving averages, bounce up, and call it a day and continue to the upside. So if that's true, the next place I'm looking for this one to go, the S fund, is going to be 2038. So perfectly, that's the next area of resistance. If it goes past that, here's the thing. If it goes past that, the next area I would look for is here. So why there? The reason being is this is the last structure. If it breaks this structure, then it would go to 2100 at least. But it has to break that 2065 area of structure to continue there. But first, 2038 will be next up. So for this one, I'm looking forward to continue up. So what does this say? All right, it says I'm in a selling trend here, but it's not strong because it's consolidating and moving up. So if the indicator says selling trend, why would it say that? Okay, so let's look at it here, and you'll see you could say that you have a flag pattern. So you could have a flag pattern that goes, here's your pole, and then here is your flag pattern that's going in an upward direction. Now this is going to continue in an upward direction. At some point, if this is a bearish flag, it will have to break to the downside. So you have your pole, you would have your flag, and then a break to the downside to have a bearish flag here. Now, I don't know if it is going to be that, but I do have a trend line drawn here, and that trend line is being respected. So at this point, I'm just going to look for it to go up, and that's fine with me. Now, for the S fund, I'm looking for it up. C fund, I'm looking for a bounce down and continuation up. Now let's go to this international fund. All right, international fund. We got some good movement here. We have rejection here off of the 77.44. It filled the gap. We can get rid of that gap now. Goodbye, gap. All right, so now we filled that gap and this gap. We have this candle here. Big sell-off. Our previous week came up a little bit. This one, all right, the body closed above this previous body here. So this candle's body closed above this candle's body. That's great. It's still a bearish move, but here's the thing. It is still a higher low than the previous low. So that's a good thing. That's very good. Currently, it's telling me I'm in a sell zone. This one also gives a lot of divergence back here. Of course, March 25th was the last time we had a lot of movement in the market, a lot of strength in the market. Price action's going up and it's come down. If you look, this international fund, I'm not going to say it's going to lead the other ones, but you could say that the international fund is a little bit more volatile. It's not going to be the same type of movement, but you may expect some downward movement at times in the other funds, just based on people rotating in and out of the funds at certain times of the year. So keep an eye on that. And for this one, I'm looking for it, to be honest with you, to continue downward. Only because I would look for a bounce off of the 50-day moving average, and that most likely will end up being around the 74.40 area here, because it's under the 9-day, it's under the 14-day, and yeah, generally once you get under these two, it wants to meet the 50 for a little bit, or it's going to have a very big push up. Now, this next week will tell us for sure. If next week closes above this high right here, that last high, so let's just say it's at 79.01. If we get next week it closes above 79.01, hey, let's go for it all. Let's go back up to 82.17. So that's it for the international fund. And last but not least, let's talk about that bond fund. So in the bond fund, I just left it on. Let's see what we got. Looks like we're still in a buy zone. So if you were interested in the bond market, you may get a good entry coming up this week. I would look for a bounce off of one of these moving averages, the 14.09, and that would confirm the movement up, consolidation, breakout, retest. So after you get your retest, it's time to collect your orders and move up. So if we can get a very good volume push up to the 97.54 and break that 97.54 in the bond fund, look for that 98 and most likely the 100 to get tested again. So remember, the bonds are going to be based off of the interest rates. If the interest rates are going to be higher for longer, then the bond market is probably going to be good. So let's keep an eye on this. This could be a good mover for the next week or two, or maybe the rest of the year, depending on the news. And remember, take your time, learn what you need to learn to be good at doing this TSP thing. And if there's any questions, let me know in the chat, or let me know by a message or something. I'll get back to you. So that's it. Thanks for listening. See you next week on Stock Shots.